question 2, I now need to do the substantive procedures for the FinBank loan, including the financials at year end. So I've already got quite a lot of summarizing that I did when I read the required. But if I didn't have this, guys, I need you to think about it. What happens when they take out a loan? It was taken out in the current year, right at the end, in March. So there is a journal entry. On the date that they take out this loan, they will debit bank and they will credit this loan. So I need to test this entry first. It's a transaction. You can see that it's just taken place. And so that's why I need to test my accuracy, my occurrence, the date, the journal itself, the classification. It's one transaction, guys, so I don't need to worry about the completeness of the transaction. Okay, it's one. I'm not looking for a missing transaction. It's just this one. And then what happens? Subsequent to this, there will be interest. There will be a debit to interest and a credit to this loan. And so I'm going to have to test this transaction. And if they need to make any repayments, there will be a debit to the loan and a credit to bank. So I'll have to test that transaction so that at year end, the balance is valued correctly, which I'm going to have to test. That it exists. I don't have to worry about completeness because it is one balance. Okay. And throughout, I will check the end that it's been presented and disclosed correctly. Okay, so my assertions are going to be relevant. They're going to help me to test this. On this initial transaction, is it accurately recorded? Did it occur? Was it authorized? The date that it was recorded, is it in the correct period because this took place at year end? Okay, and did they classify it correctly? There's a loan here. What's current, what's non-current, and this is going to be with regards to your presentation and disclosure in the financials. Okay, let's go to this loan quickly so that we can then see anything additional to what we've noted here in terms of the loan requirements. So I come into the scenario where they discuss this loan taking place, and they say that they applied for a 20 million rand loan. So this is the rand amount that should come through the bank initially. Then there are terms with regards to this loan. The interest, here's the rate for the recalculation. The repayments are equal monthly installments. Here's the details for the recalculation. It's a 5-year term. This is required for you to determine what these monthly installments are. There are covenants, there are rules with regards to this loan. This is going to have to be tested to see if they have complied. Because if they don't comply, then full repayment is within 12 months, not the 5-year period. Okay, they note here that they have complied, but the auditor can't just say, oh, they say they have, so they have. Auditor is going to have to test the compliance because that's what we do. All right, so I'm going to start by working through the substantive procedures document that you guys have, just to show you what's going to be relevant here, and then we'll put the procedures down so you can see how you should have structured it to maximize your marks. So guys, this is your substantive procedures document, the first document that we worked on when we did our first lecture on substantive procedures. And you'll see, when we're looking at our class of transactions, the general procedures are always first. So I'm going to have to go and agree the closing amount in the GL now, because yes, we are looking at the transactions, but it's for a balance. So the closing amount in the journal to the trial balance. I'm going to have to cast. I'm going to have to inspect for unusual items. I'm going to have to get the management representation letter, and I'm going to have to do some analytical review procedures. Then, I don't need to worry about the completeness because it's one transaction, so I'm not looking for samples, but I still need to test the occurrence. Is this a valid transaction? I don't have to get a sample, but I do have to agree that this was authorized. So for the loan to be authorized, I'm going to have to look at the minutes of meetings. I know that this is what I need to because of the finance and investment cycle. And I need to look at the loan contract. Then I'm going to have to look at the accuracy. So I'm again not looking at samples because it's one transaction, but I need to agree the details to the supporting document, which is the loan contract. So I'm going to have to go and get that contract and agree all the details according to what they've done. What is the interest rate? The repayment terms. The covenants, because that's part of the terms of this contract. I'm going to have to then go and recalculate all of the above, the interest, the repayments, the covenant ratios to see if they have achieved them. Cut off. I'm going to have to go and look at the date that it was recorded and that in comparison to the contract to see that it is in the correct period. Classification, make sure it's gone to the loan account. Okay, presentation and disclosure we'll look at when we look at account balance. So now we go down to the account balance assertions. For our account balance assertions, completeness, I've said we don't have to consider because we are not looking at the completeness of all loans. We're looking at just the FinBank loan. So I don't have to do additional procedures to see if there are any loans that have been left out. Existence, I can go and get a confirmation with the third party because the loan is with a third party. So I've got a procedure I can do here. Valuation and allocation. So initial recording, we've tested the accuracy by looking at the contract and details. I will now have to look at the subsequent measurements. Okay, so considering everything that gets included to give me that balance at year end and potentially doing a recon if required. Okay, rights and obligations, we're going to get the details from the bank as a confirmation and therefore also helping us to prove rights and obligations. And then finally, presentation disclosure, we will do according to IFRS requirements because it is a loan balance. Okay, so let's go and set out the solution. I'm doing question 2. And I automatically start with my general procedures. So I'm going to ask for a schedule or a listing for this loan. So obtain a schedule for the FinBank loan for the year ending. And now what I need to do, agree the closing balance to the loan general ledger accounts trial balance financial statements. I want to go and cast the schedule. I want to scan for unusual items, negatives, backdated transactions. Just anything that would be unusual for a loan schedule. Okay, then I can say obtain a management representation letter for all the assertions relating to the Fin Bank account balance. And that is from your ISA 580. And then a standard general procedure considering the effectiveness of the controls around this account balance. And the impact on the nature, timing, and extent of substantive procedures. Because if the controls work, then we may want to do more analytical procedures and less test of detail. If the controls don't work and they don't have controls, then we need to do more test of detail. So because I've now done that, I can go and discuss some analytical procedures that I should do. I'm going to say perform the following analytical procedures to test the reasonableness of the Fin Bank loan. And I'm going to compare the loan balance to similar loans given to similar entities in the industry. I can compare the interest rate to a market related interest rate to see if it's reasonable. I can do interest as a percentage of the loan to a budget. So I would generally give 2 or 3 analytical procedures that are linked to this balance. Interest, they have ratios in the covenant, so I can go and recalculate the covenant ratios and compare to industry covenants on similar loans to see if those are reasonable covenants. And that's now my general procedures as well as the analyticals addressed. Now I need to get into testing that initial recording and then the balance. So for the initial recording, guys, we said you got to test the occurrence and you got to test the accuracy as well as the cutoff in terms of the date. So for occurrence, all I'm going to say is go and inspect the minutes of directors' meetings for authorization of this loan from Fin Bank. That's the first document in our finance and investment cycle, the minutes of meetings. It's not a cycle where there's multiple transactions taking place on a daily basis, where there's a whole bunch of documents that will get authorized. Your minutes would be authorized, and then your contract. So now I can go and test the contract as well as the authorization of that. So I'm going to say, obtain the FinBank loan contract and agree the following details. One, that the loan amount is that 20 million. That interest is at prime plus 1%. Repayment is equal monthly installments. Guys, I set the paper, so I remember the details, but you would be going back to the scenario for these details, that it's a 5-year term. What are the covenants? And then I'm going to inspect the loan contract for authorization by both authorizing parties. Needs to be signed by both an authorized representation of FinBank as well as by Cookienet. Okay, now that I've agreed the initial transactions, let's actually do the date. Sorry, I didn't do that, the covenants and then the date that it was initiated on, because that's the date now it should initially be recorded in the financials. Now, I can test what came into the bank statement. I've got the terms agreed above, that there was 20 million, the interest and so on. What was that initial journal entry is the amount coming in. So I can go and inspect the bank statement on that date for the 20 million incoming per the loan contract. Okay, let's go have a look at our required quickly. I just want to mark off what we've done so far. General we've done, analytical we've done. We've now done the initial recording of the transaction, testing accuracy, testing occurrence, testing cutoff classification. And we've done the journal to the bank. There are now the subsequent measurements in terms of your valuation, which is now going to be this interest, the repayments, so that we can get the closing value. Okay, so I now want to go and test this calculation. I want to go and test this calculation. This then can go into the bank statement because there's an amount that goes out of the bank there. And I can continue with the rest of my account balance assertions, existence, presentation, disclosures. Okay, so let's go and test the interest calculation. Test the interest rate. Test the repayment calculation. Trace it through the bank statement. Guys, before I go and recalculate the interest, there is a variable term for the interest in the prime interest rate. So I need to go and first check that the prime interest rate was correct. So I'm going to go and obtain the prime interest rate from the bank and agree this to the prime interest rate used to calculate the interest expense. I make sure they're using the right rate. Then I can go and say, recalculate interest on the loan by using the prime rate above plus the 1%. Then I can recalculate the equal monthly repayments and agree this to their calculation. And then inspect the bank statement for this equal monthly repayments. Agree it to what's in the bank statement. So I can come back here and I've tested this, I've tested this. I now need to consider that valuation is correct. Go and test existence and presentation and disclosure. So for existence, I must get the permission from the client to send an external confirmation, and with that permission, obtain an external confirmation from FinBank about the balance on the loan at year end. Okay, I must get that permission because it's a third party confirmation. And guys, what is that? That's using ISA 505, our external confirmation standard. So now I'm using an additional standard. Okay, in terms of my presentation and disclosure, I can go and inspect the financial statements to ensure the loan has been correctly presented and disclosed in terms of IFRS. And what I know, there has to be a short-term portion and a long-term portion. So your current versus long-term. Let's go into the scenario. I'm here just to test or make sure that I have done everything I need to. I've tested the 20 million. I've tested the interest rates and recalculated it. I've recalculated those equal monthly installments. I've tested the term in the contract. Ooh, what I have not done is tested these loan covenants. These were specific to the contract. Okay, so now I need to go and re-perform these calculations to see that they have achieved the minimum non-current liability coverage ratio of 0.5. I need to see that they have achieved the minimum cash interest ratio of 6. I need to compare current liabilities to current assets to see that they do not exceed current assets. And I need to see whether the financials were available within 60 days of year end. And now I want to test those covenants. So I'm going to say perform the following procedures to test the loan covenants. I'm going to recalculate the non-current liability coverage and ensure that there's a minimum of 0.5 ratio achieved. I'm going to recalculate the cash interest coverage and ensure that a minimum of 6 ratio is achieved. I'm going to compare current assets to current liabilities and ensure that current assets are greater. And then I'm going to inspect whether the financial statements were provided to FinBank within 60 days of year end. If we are auditing and we are still within those 60 days, you could then say, inquire how they intend to provide those financials within the 60 days. Okay, but as you can see, we have done everything we need to. We've used the assertions, we've tested all the detail, we've considered how the accounting standards tell you to account for a loan, and I've gone and tested all of those. Alright, so now let's go and have a look at the solution.